America's pickup truck market is not collapsing because drivers stopped wanting trucks. It is cracking because the machines they love are becoming financially impossible to own. 4-figure payments, 7-year loans, soaring insurance, dealer extras, and repair bills are pushing budgets beyond the Redline. Strap in. Feel the power. Welcome to Torque Tribune, where every turn fuels your passion for motoring. Today's pickups may be stronger, smarter, and more luxurious than ever, but their financial foundation is buckling beneath the weight. Here are the 6 forces transforming America's truck market, and the final one could save buyers thousands before their next purchase. Number 6. 4-figure payments. America's truck budgets hit Redline. Truck affordability now revolves around a troubling benchmark: $1,000 monthly payments. Once associated with exotic cars and flagship luxury SUVs, that figure is increasingly common for well-equipped crew cab pickups priced at $60,000, $70,000, or more. Dealerships often shift attention from total cost to manageable monthly payments by extending loans, increasing down payments, or applying trade-in equity. Yet the loan excludes insurance, fuel, maintenance, registration, tires, and repairs, all of which can be substantial. Pickups remain appealing because they tow, haul, commute, carry families, and tackle harsh weather. But versatility cannot make an unaffordable truck financially sensible for a stretched household. And those towering payments did not appear by accident. They grew as pickups evolved from work tools into high-margin luxury machines. Number 5. Workhorses to luxury suites. Trucks lost their purpose. Pickup trucks began as durable work tools, built with strong frames, practical beds, tough cabins, and reliable powertrains. Modern models are more capable than ever, using turbocharged engines, advanced transmissions, and sophisticated suspension systems to improve torque, towing, comfort, and control. However, manufacturers also transformed trucks into high-profit luxury products packed with leather, panoramic roofs, massaging seats, giant displays, premium audio, powered tailgates, and driver assistance technology. Added electronics, hybrid systems, direct injection, and software improve performance and efficiency, but create costlier repair risks. Today's trucks are safer, stronger, quieter, and faster. Yet many buyers finance luxury machine prices for basic work needs. But when luxury pushes sticker prices beyond reach, lenders step in with longer terms that can turn affordability into prolonged debt. Number 4. 7-year loans. The debt trap buyers can't escape. As truck prices climbed, lenders extended financing to 72 or 84 months, lowering monthly payments without reducing the vehicle's actual cost. Buyers remain in debt longer and pay more interest, while depreciation can outpace the shrinking loan balance. After several years, owners may owe more than their truck is worth, creating negative equity. Trading early often rolls that unpaid balance into the next loan, leaving the buyer underwater before driving away. An 84-month term can suit stable owners with strong down payments and long ownership plans. But if 7 years is the only way a truck fits the budget, the financial drivetrain is already overloaded. That debt trap marks the perfect halfway point, because the next costs are often hidden until after the buyer signs. Before we uncover those hidden costs, hit the subscribe button and give this video a like. Your support keeps Torque Tribune delivering high-octane analysis, practical ownership advice, and the latest vehicle updates for enthusiasts who want more than brochure talk. Now let's crank up the power and expose the next financial ambush. Number 3. Hidden ownership costs. Insurance and add-ons strike hard. Truck buyers can face major expenses beyond financing, especially insurance and dealer-installed extras. Modern pickups hide costly technology inside bumpers, windshields, mirrors, and LED lighting. So even minor collisions may require bodywork, sensor replacement, electronic diagnostics, and precise recalibration. Those repair risks can raise premiums, particularly on powerful, luxurious, or frequently stolen models. Buyers should request an insurance quote using the exact VIN before signing, since similar trucks may cost very different amounts to insure. Dealer add-ons such as coatings, nitrogen-filled tires, trackers, tint, warranties and protection packages should also be itemized, questioned, and never disguised inside an extended monthly payment. And when rising ownership costs slow demand, unsold trucks begin piling up, turning dealership inventory into an expensive ticking clock. Number 2. Unsold trucks. Aging inventory starts burning dealer cash. Unsold pickups do not guarantee across-the-board discounts because inventory pressure varies by configuration. Practical trucks with popular engines, useful towing equipment, and competitive pricing may still sell quickly, while heavily optioned luxury trims often linger. Dealers commonly finance inventory through floor plan credit, so every unsold truck continues generating interest and carrying costs while occupying valuable lot space. As a vehicle ages, buyer leverage can improve, but incentives usually target specific trims, engines, model years, or stock numbers rather than entire lineups. Smart shoppers should compare dealerships, monitor long-standing listings, ask arrival dates, and inspect back-row trucks where the strongest bargains may be hiding. That uneven inventory pressure creates opportunity, but only for shoppers who ignore flashy badges and buy precisely the capability they need. Number 1. Truck sticker shock. Buy only what you need. Advertised pickup prices often reflect basic, hard-to-find configurations rather than the trucks most buyers actually see. A $40,000 model can quickly become a $70,000 purchase once four-wheel drive, a crew cab, a stronger engine, towing hardware, off-road suspension, premium upholstery, technology packages, and larger wheels are added. The smarter approach is to define the truck's mission before shopping. Buyers should calculate required payload, trailer weight, passenger needs, drivetrain, and engine output instead of paying for unnecessary capability. Lower trims can provide the same frame, bed, low-end torque, and towing fundamentals for far less money. Buyers should also compare credit union financing, consider leftover model years, and avoid rolling negative equity into another costly loan. Once buyers match the truck to the mission, the market's real problem becomes clear. Capability survived, but affordability lost traction. Final verdict: America's truck market hits its financial redline. America has not stopped loving trucks. The market is cracking because pricing, insurance, financing, and luxury expectations have outrun what many households can safely sustain. A reset may come through stronger discounts, simpler trims, tougher competition, or buyers keeping older pickups longer. Until then, patience remains the smartest tool in the box. Price the entire ownership experience, not merely the monthly payment. Choose useful capability over image, reject unnecessary extras, and avoid 7-year debt disguised as affordability. Will buyers force manufacturers to bring back simpler and more affordable work trucks, or will expensive luxury pickups remain the industry's preferred formula? And when choosing your next truck, what matters most? Maximum capability, premium features, or long-term affordability? Share your thoughts and truck ownership experiences in the comments. Subscribe to Torque Tribune and turn on notifications to stay informed about the next vehicle updates, detailed reviews, and upcoming videos. America's pickup market may be changing fast, but the road ahead is packed with even more surprising developments. Click one of the videos on your screen now for more truck news, ownership advice, and automotive insights. Thanks for watching, and we'll see you in the next video.